Ladies and gentlemen, welcome to the Big Tech Frenzy. So jumping right into it, these are the topics that we're going to be covering. A lot of PayPal news, as I'm potentially looking at opening up a new position in PayPal. I'll talk about why. I think that there's some very exciting announcements that I still am questioning whether they're going to lead to significant revenue growth for PayPal. Anyway, Robinhood also announces an amazing acquisition finishing up today of Bitstamp, but more along the lines of what it actually impacts in terms of financials. We got full insight into that, so that's very exciting. It's much, much bigger than I thought it was actually going to be. That's really exciting. And then we have some just additional news on other companies, a little bit of SoFi, I mean, tiny. And then Shift4 and NVDA news as well. Okay. Hood to 100. I mean, is there going to be a time where I'm holding Robinhood and the stock goes to $100 a share? I mean, I think very much so, yes. I think it ties very, very well into cryptocurrency. Cryptocurrency volumes come back, Robinhood skyrockets, okay? If it stays depressed and not what it was in Q4 or Q1, a little bit harder. No Robinhood Weekly tonight? No, most likely tomorrow. Amit is traveling right now, so it's just very hard for us to get together tonight, but don't you worry. Also, tomorrow I have I still think it remains unnamed, but the podcast with Brad Freeman and Evan Stock Market, that is going to be another very exciting one. Always like to pick Brad's brain and share a lot of the things that he's covering on his newsletter, but actually putting him on video, which he usually doesn't do. Also, did you finally open a meta position? No, I haven't. I have not. Okay. Let's see what else. Good evening. All right. Let's start off with Robinhood because I think that this news is really exciting. They finally posted a summary of their Bitstamp acquisition. So this was a company that I think started in Luxembourg, and they are a crypto exchange that Robinhood decided to acquire for $200 million in cash. Okay? Not even stock, $200 million in cash. Yet, Bitstamp serves over 500,000 funded retail customers, funded accounts, and approximately 5,000 funded institutional clientele. Bitstamp's exchange volume is mostly institutional, which is heavily in line with what we see at other institutions like Coinbase, where the mass amounts of volume come from the institutional clients, but the mass amount of the actual revenue comes from retail clients. Okay. The total net revenue over the last 12 months was approximately $95 million. Guys, $95 million. If you think about that, we paid $200 million for a company that's producing whenever, in the last 6 months or so, volumes were much higher. So, but still, in the last year, $95 million for a company that we bought for $200 million. That's a 2 times price to sales. Okay. Meaning in 2 years, we will have made back just in revenue, not earnings, what they actually did in terms of just pure revenue. Anyway, if we continue to go down, they said Bitstamp is approximately adjusted EBITDA neutral right now. So they're just sort of breaking even. And it's actually going to cost Robinhood some money by acquiring this new business. They have some operational expenses that they're going to have to throw through in the amount of about $65 million. So think of this as acquiring 500,000 clients and 5,000 funded institutional clients with a whole bunch of regulatory approvals and mass amounts of expansion through all of Europe and all different areas like this for about $265 million. Okay? Which I think is an absolute slam dunk. But let's continue here. If we bring back, there's a couple other things. So we just talked about these parts, which is the costs that Robinhood is going to assume whenever they acquire this. They also said Robinhood is actively working on integrating with Bitstamp. Bitstamp is already connected to Robinhood Legend and Robinhood's smart exchange routing offering. Okay, So what this means is that this is not going to be a standalone business. We already knew that was going to be the case, right? Bitstamp's actual name brand is probably going to go away. Those clients are going to fall under Robinhood crypto clientele, and institutions will be named their own separate, entity. But it's the offerings that they bring over. The Bitstamp coin offering is over 100 different cryptocurrencies, which a lot of the volume that is actually seen in crypto is not done just purely on the big coins like Bitcoin, Ethereum, and Solana. A lot of it is. I mean, still a heavy bulk of it is in the big names, but a lot of it is on the altcoins and shit coins as well. Excuse my language, but that's literally what they're called. So, this acquisition is so much more than just buying clientele or buying profitability. It's really a way for Robinhood to speed up their process of getting better crypto products out, okay? Better smart exchange routing, better potential staking or potential lending, or all the different integrations that they can have with DeFi clientele. Who knows? All to say, to sum it up very easily, they're getting a lot of tech out of this, okay? But potentially what Bitstamp has done wrong that, they've kind of fallen behind their peers like Coinbase, for example, which a lot of people don't actually know this. Bitstamp was around way before Coinbase was. They were like the first exchange, okay? I think they started in 2011, if I'm correct. And Coinbase started in 2013. So they had a 2-year head start. However, they're nowhere near the size of Coinbase, mainly because of just customer experience or user experience and their user interface. If there's anything that Robinhood does extremely well, it is things like UX, UI, user experience, user interface. And so getting these clients a potential much better approach to how they should be on their phones or be on desktop or anything like this is such an important aspect to Robinhood's M&A strategy or mergers and acquisitions. So whenever they go out and buy these companies for unbelievable pricing, it's not just about buying the profitability of those businesses. That's not what Robinhood's looking to do. They're trying to acquire tech and customers. And then they can offer their own solutions. Think about it similar to Shift4, if you guys follow that company. They're buying businesses that are usually more legacy, but then they know that once they offer their services to those existing clientele, it's a guaranteed cross-sell. So go back to these 500,000 funded retail customers at Bitstamp and now offer them, we also have equities. We also have options. We also have all of these extra things, which would be a great road into a lot of other countries in Europe, right? Which, talk about Luxembourg. Robinhood recently just got an approval. It wasn't a full banking approval, if I'm correct, but it was a brokerage and trading approval for like a Class A brokerage in Europe. So I think that they will start going into these customers, potentially even including funded institutional customers, and say, here's what we also have to offer you that we could cross-sell to you. Get these crypto customers on Robinhood Gold. Let's start asking for $5 a month so then we can get them all of the additional products that the US clientele have really gotten used to, which has made Robinhood the name that they are. So this is a way better purchase than I would have ever have thought. 500,000 customers, insane. We're probably going to add over 1 million new customers this quarter alone. Very, very exciting. Very low price to pay. Very low. Hood is buying SoFi next. Not a chance. In no way would they ever do that. But yeah. Any SoFi news here? So just slight news, and we can go into that. Essentially, what I wanted to cover was this. Actually, let me go to tip ranks because that'll be the best way for me to show you guys. Bear with me here. I'm going to go to SoFi's tip ranks thing where they recently just got a new analyst downgrade. Let's say, even though it was a hold position, but they're saying that SoFi will not move at all here. So if you take a look here, and by the way, tip ranks, I partner with them, so you guys can get a discount if you want on tip ranks products. But anyway, tip ranks AI, yuck. Okay, sorry guys, I don't like these types of AI products. Sentiment on companies that are designed like with what they see in certain trends, whenever that doesn't tell you individual company success or anything like this. So I'm no fan of these AI tools on any app, by the way. I don't like sentiment tools. Seeking Alpha they all have them. They're all useless. I would never read into them. Anyway, this unknown analyst here is Matthew Coward, I think his name is. I'll have to check it again. But Matthew Coward of Truist Financial put a $14 price target for SoFi today and said, hey, you know what? It'll be flat for the next 12 months. Well, this is essentially why people potentially do not want to trust Wall Street, or they're not a fan of this type of analysis. Let me show you guys why. And Roy Crossroads did an amazing write-up here. This same person from Truist also wrote up a $55 buy rating on Affirm, said that buy now, pay later growth is doing great, and they're aggressively ramping that product. But then they also said Block, with their sell rating, they are leaning heavily into growth in their lending products, and that's bad. Okay, they're the same thing, buy now, pay later. They also gave a sell rating to PayPal. And in fact, if we actually go down, they also did SoFi's as well. It's a lot to do in one day. Here, actually, I have it in a separate thing if I can't find it. It's a lot to do in one day. In fact, these were all of the transactions that they made in this single day. They said, hey, we have an opinion on Block, Global E, PayPal, Affirm, Lightspeed, Shift4, Fiserv, SoFi, Flywire, Bill, MasterCard, Visa, dLocal, Toast, Fidelity, and Global Payments all today. Way to go, Matt. I believe you did extensive research on all of those names. We trust you. As Roy said, it was a busy day for them. Good stuff. The important part, and maybe some people can say, okay, well, they've been doing research forever. They're just saving it all to launch it all in one single day. But news comes out all the time. The important thing is for people, like if you watch a lot of the Wall Street analysts that are following Shift4, a lot of them just recently updated their prices like today or yesterday. Why is that? Well, because Jared Isaacman just recently was not selected as the nominee for the new NASA chief. So they're going to have to go back and say, hey, the old CEO, which was an absolute mastermind, elite entrepreneur, essentially a genius, is now coming back to work for Shift4. They said in his note whenever he was leaving, it literally said this. The company said Isaacman would remain as Shift4 CEO until he was confirmed. At the time, the president, Taylor Lauber, was tapped to succeed Isaacman on Isaacman's confirmation. Well, he never got confirmation. Okay, so now Jared Isaacman is going back to work, so they have to reissue. Okay, well, we think that this is actually better for Shift4. Not that Taylor Lauber can't do the job, but if we can have Taylor Lauber and Jared Isaacman both working towards the same goal, two giants are better than one. Not that I don't think that Taylor Lauber is unbelievable. I mean, he's been the president of the company and he's been running the show for a very long time, regardless. I mean, he's been around for a while, I think 2018. So, and by the way, actually, just to go into a little bit of background with Taylor Lauber, although he's been there since 2018, his first employment with Jared Isaacman also goes back all the way for 2004. Okay, he was actually one of the original employees of Shift4 back whenever it was called United Bank Card. So it wasn't even called Shift4 back then. Anyway, just a fun little piece of little lore there for you guys. But yeah, this Truist announcement was made me sick to my stomach. I think it's bad Wall Street work. Matt, if you see this, I'd love to know how you guys came to those conclusions. Maybe you can clear it up. Maybe I can apologize for being so hasty to my quick remarks to your style of analysis. But as it seems, I cannot analyze 15 companies in a day, nor do I think I can hold all of those analysis up to one day, because new things are happening all the time, which changes the course of a business. Let's transition that into me also changing potential course on a business through PayPal. I have been a shareholder of PayPal for a while. It was like almost 24 months. I think it was roughly 20 months that I was a shareholder in the business. And then I recently, you know, sold my share in the business after Q4 earnings were announced. Whenever Q4 earnings were announced, they had to show guidance for 2025, full year. Really, really depressing 2025 expected guidance. Alex Chris, the new CEO, hotshot young CEO. I've got all respect for him. Okay. That's not why I sold. They said that they were being very conservative, but I was just a little bit, I didn't want PayPal for the long term. Okay. I wanted it for a short trade. It was extremely undervalued whenever I bought it. I got my average down into the 50s and then sold it into the high 70s. I could have gotten as high as 90, but it sold off once Q4 guidance ended up happening. So I had to actually take a bit of that hit that day because I think it was down like 9% or something like this. So I didn't go, peak to trough or anything like this, but I'm now potentially looking to get back into it. One, because the stock price is lower than when I sold it. So, A, fun. But two, they're showing some pretty significant actual growth in the products that they're offering, and ones that I do think will make meaningful change into their growth. Pricing in all the facts of their aggressive buybacks, their conservative guidance for the year. I haven't made any calls yet, but let me show you the new things that they've been showing off and why this could potentially change PayPal's future. The biggest one I'm going to show off, and probably the most impactful, is one that is probably the smallest changes, but it's some of those that are the smallest that actually make the largest difference. So if we go in and we can talk about PayPal's success in agentic commerce, but no one really knows how large those things are going to get yet. They're exciting future prospects, but really, we don't know how much agentic AI will get done. Currently, it's probably near zero. So it's exciting that they're working on these MCP servers, but I'm all shoulders right now. This is how I look whenever I'm looking at their work in agentic commerce, okay? I'm all shoulders. But Alex Chris put out this. Today, we officially launched our PayPal mobile wallet and in-store tap-to-pay and buy now, pay later in Germany. This is a small change, one that we knew was coming, but makes a huge difference to PayPal's overall use case, okay? This is going directly after the the Apple Pay Advantage, which is a hardware, tap-to-pay solution. Apple had to open up their technology because EU said that they had a sort of a hardware advantage that was not allowing for any real competition to come in. So they had to open up their, what's called FTC. What is it? The technology that allows, technology to pick up a signal in very, very close range. I forget what it's called. Anyway, someone will say it in chat, please. But Alex, essentially, NFC. Thank you, guys. Appreciate you. NFC. So this is now allowing PayPal to now come in and offer a solution that goes head to head against Apple Pay to say, okay, now we can compete on initiatives, cash back, user experience, all of these different things to actually, really compete. Not only that, they're also offering buy now, pay later in more countries than just America. Oh, and we crossed 1 million signups. Today, we officially launched. Oh, and we crossed 1 million signups. Okay, let's show what that means. Crossroads also showed this off, so I want to give a lot of credit to him. He is the PayPal guy, okay? In the German App Store, PayPal very quickly rose back to #1 on the list, okay? They have a new offering that is getting people excited again for PayPal. Now, is Germany a large market? No, and this is the biggest critique online. Does this change SoFi or PayPal's total revenue growth? Not at all, okay? But if this is what they're able to do now, offer tap to pay, expand it to buy now, pay later, and put it out, and it sees immediate impact in that country, who's to say that they cannot expand that throughout all of Europe. And then, because it's also opened up in the States, whenever Apple got that notice from Europe, they opened it up for US, Canada, globally, right? It was like a change that they did all the way back in like January. So imagine they start to roll this out now, okay? And we do see that level of success where people are going, oh, this actually makes PayPal really useful again, and puts them one-to-one against their competitors. Oh, but also, they also have that merchant, success as well. They have 35 million merchants. They have all the cards that I want there. They have the initiatives, the cashbacks that I want there. They've got a very useful credit card, right? That makes PayPal right back in the gunning for number one for a real mobile wallet. And so that is very exciting, not for the German market, but for all markets as they roll out this technology. Now let's get back to the things that, people are really excited about, which is the agentic commerce. Okay. I'll start off with the news that happened a little bit ago, and then I'll move this into where it is today. One, PayPal has announced that they are going to be working with Perplexity. So whenever you're there, yes, you can get trusted answers, but you're also getting trusted transactions. PayPal is coming to Perplexity. Now that's very exciting, right? Perplexity is growing very fast, but then Crossroads once again had said, guys, let's not forget that Perplexity's growth could skyrocket. Samsung is nearing wide-ranging deals with Perplexity on an investment in deep integration into devices. Okay, Bixby Assistant and web browser. I'm told arch rival Apple has also been interested in working with Perplexity as well. So potentially, the company that is working extremely closely with, an online commerce tool that lowers conversion rates at the expense of higher pricing, but really, really high authentication rates, high conversion rates, trusted brand with 800 million vaulted users, okay? Billions of cards, is now coming onto Perplexity side, and Perplexity is going on potentially to the Samsung and Apple devices. So this is partnership at its best, right? PayPal has such a data advantage. It has such a user advantage, but it just needs to get itself out there again. And people need to relearn PayPal a little bit, But this is a great way. Alex Chris is doing a fantastic job here. On more newer news, and this is where I say this is very exciting. I can't wait to see how this unfolds, but I don't know what it means for a revenue or net income perspective. PayPal is now expanding the remote MCP server tools, which means developers can work better with a more open suite of tools that allow them to tap into PayPal's agentic commerce, meaning like you can tell agents or you can tell your bots that you're making, like LLM bots, hey, not only are you able to tap into these different apps and go in and you have my password so you can make Twitter posts for me or whatever, however these agentic bots are going to be made, okay? But now, let's imagine you're a supplier. You can go onto these websites, and for every order that you see on our site, we need you to order the same amount of supplies from our suppliers out over here, or whatever. I'm just thinking of something off the top of my head of how agentic bots could be used. They have your credit card information. They have spending budgets. They have a certain, token limit. So this can only happen so much before a human would interfere. And you can go out using PayPal's tools on both sides of the equation, both the merchant side and the user side. Potentially, this is very, very forward-looking commerce experience. They're not the only ones doing this, by the way. Visa's trying to do this. MasterCard's in talks to do this as well. But it's good that the company that people look as a very legacy, slow-moving player is working with some of the most advanced tools in artificial intelligence. Pretty exciting. Who is financing the buy now, pay later that PayPal is offering? Is it PayPal themselves? Yes, it is. PayPal is offering buy now, pay later through their own capital. But not only that, they've actually offloaded a lot of their buy now, pay later to companies like, what's the one? KKR. That's what it is. KKR has been buying the bulk of their buy now, pay later off of them. What's interesting about buy now, pay later, because I used to be a shareholder of PayPal for a while, so I know these little details, but more of the newer stuff I haven't really kept up with. But with buy now, pay later, what they've realized, even offering zero APRs, which now they're actually offering, like they charge the merchants more. Okay, I think it's 5.99% rather than the 3.5% or 2.99% that they would normally charge, whether it's through Braintree or PayPal's actual checkout. But the buy now, pay later charges more, but they also found that the funding source to pay off your buy now, pay later is usually debit cards. Okay. It's a lower cost to repay your buy now, pay later, which actually means that the operating margin on buy now, pay later is actually better than the actual checkout itself. So interesting stuff like that. They also deal with a very, very high-end client. The people that make six figures or more are more likely to choose PayPal's buy now, pay later than any other buy now, pay later solution. Okay. So they always find that the defaults are a little bit better than what you could see at other companies because they're dealing with a more affluent customer. Tariq says they're selling their buy now or their Google soon. No, hold and be rich. Where's Tevis? This is my big tech frenzy. Tevis isn't on the big tech frenzy. This is my daily live stream. Dollar Dan says, what are you all buying now? I want to buy the Circle IPO. That's interesting. I don't think I'd touch that, but could be. Could be. I think that there's a ton of players now on the stablecoin side now. And I don't know. Stablecoins to some degree feel like a large commodity. Circle has had a massive first movers advantage with Tether and being like very geographically locked. Tether very much so on like African and EU countries and stuff like this, where Circle has been super big in North America. But now you have a lot of players, including PayPal, by the way. PayPal USD is growing, so could be. Why wouldn't PayPal buy Shift4? Honestly, not a bad acquisition. I think that would be a stellar acquisition. But yeah. So, like I said, the Shift4 news as well, very exciting that Jared Isaacman is back. Might also mean that they're not looking to sell because he probably has a much better chance of running that business and increasing shareholder value, and probably doesn't want to work under another CEO. So I think with Chime going public, analysts will start to see SoFi's true value. So that'll probably be one of my next videos. The Chime IPO makes SoFi look so unbelievable. And to my understanding, whenever I was looking into Chime before, they were like the almost Revolut of America. Like this was a company that's growth you could just not contain. They were doing unbelievably. Now that I see that their revenue expansion over time and what they've done on a net income basis as well, which has been be unprofitable, it really does just go to show how unbelievably good SoFi is. Tanner, are you concerned with the lack of news from Nubank? Not at all. Not at all. I'm actually looking to potentially add to Nubank right now. Tanner, can you explain the Dave run? Honestly, I can't. It's not a company that I follow. Yeah, I couldn't. Just got here. Did you buy PayPal? I haven't purchased the stock just yet, but I'm actually trying to relook at the company once again and determine if I am going to rebuy it. Alex Chris is seemingly making partnerships like crazy. Okay, so if you guys want to know a pretty easy unlock, if you want to talk about a business that has done so well, the king of partnerships is Shopify. Okay. They grew to such a massive total addressable market, a lot on the back of partnerships, king of partnerships. And not through Dan Schulman, but specifically through Alex Chris, the partnerships have been insane. Partnerships that we never thought were going to happen, like Amazon, for example. The Buy with Prime, partnership with PayPal was huge. We were seeing this all throughout the end of 2024, but it's hard to find immediate revenue boosts whenever the contracts are just starting to finish and just starting to roll out, right? This continuing into 2025 with Perplexity and everything is very exciting. So I am very happy with the new management. Alex Chris is doing great things, and the company from a financial standpoint is doing exactly what it did whenever I was happy under Dan Schulman, which was a ton of buybacks and just trying to return a lot of that shareholder value. So they're still doing that, but they're still trying to find new total addressable markets. They're trying to stay on top of the newest products like buy now, pay later, stable coins, agentic commerce to see how big that's going to be. But yeah. Hood is running up before Friday. Is this a buy the rumor scenario, or is this because of Bitstamp? I mean, it could be a little bit of both. I think that the Bitstamp acquisition, at least for today, was probably a better deal than people expected. I was not expecting 500,000 funded customers. Okay, so not total customers, but funded customers. And then on top of that, bringing in $95 million in the last 12 months on a company that you bought in cash for $200 million. That is crazy. Like, we need to really understand this. Tanner, in your opinion, does Hood get added into S&P? Yes. Yeah. I think it probably does, like, right here in June. That's why we're excited for Friday. Tanner, have you looked deeper into Nebius? Not yet, to be honest. No, I haven't. Just this week's been very busy with, NVIDIA stuff and a whole lot of Mag 7 news, so I haven't really. And by the way, there was an article recently put out on the Stargate projects that, Oracle is trying to oversee a lot of that. And we learned a little bit more about their plant in Texas, that they want to now get up to 400,000 NVIDIA GB200 chips. Okay. At full capacity, that's $45 billion in revenue for NVIDIA alone. This is one data center, okay, for one company. And OpenAI, by the way, the main company behind that entire expansion, is not even just partnering only with Oracle and only in this one data center. They continue to roll out even more and more and more. So $45 billion in revenue is what they're guiding for all of next quarter. These are the types of customers that is funding the growth at NVIDIA. And like, as far as we can see, there's no slowing here. Anthropic just posted that they're going to do about $3 billion in annual revenue, which is more than what I think a lot of their investors were expecting. But it's the growth rate on this revenue. A lot of what they're doing is not even being like fully monetized yet. And Anthropic is nowhere near first place. So if the companies like OpenAI are going to try to put up $13 billion in the next 12 months, and then they want to get to $125 billion by the end of, 2029, then in a leaked report by OpenAI employees is that they want to run a deficit for the next 2 years of $20 billion each, because they know that that's what they're going to have to do to keep their market share lead. But whenever they say, hey, we're willing to burn through $20 billion of new shareholders' money that's coming in, funding our growth, which, they have to show those roadmaps to their investors and to people like Masayoshi Son, who are saying, hey, we're happy with that. Let's put another 40 in because We want you to win. How does Google, how does Microsoft, how do all these other businesses even try to keep up? XAI, by the way, which also just put up 300 million more dollars or shares for sale at like 111 billion dollar share price, $113 billion valuation. In order for them to, well, one, why are they even raising capital? It's to put more into buying more data centers. But it's all just going back into feeding the growth that is the number one like benefactor of all of this is NVIDIA. Loving it, loving it, loving it. CoreWeave just gave $7 billion to, I think it was Applied Digital, right? Yeah. Yeah, true. Okay, Paul, I'm agreeing on being bullish with SoFi. I'm confident with $25. Hope for your number. Oh, there's a little chats going on. $30 end of year. Yeah, I think by the time we see Q4 earnings, I mean, I could be wrong. I've made predictions around SoFi before, but I don't think that their growth can continuously be ignored to be ignored. And I have full confidence that Wall Street has no clue what's about to happen for Q2 loan platform growth. We've seen way too many deals. Okay. We're at a really good environment for them. Customer growth is insane. So they're going to have a ton of demand on their loan side. I don't know. We're going to see in a few days, like their actual growth in traffic. That'll tell us a lot about their actual member growth. Traffic has lined up really, really well with members. So that could be very exciting. LA Rams and LA Chargers games at SoFi Stadium. Yeah, that's been consistent. There's always been massive events. So until there's a massive event again, like Taylor Swift, I'm not going to pay attention to each and every game that happens there. But yeah. So this is a little bit of a, what do you want to say? Not a big deal. To my understanding, the World Cup or FIFA World Cup is not displaying any of the stadium names. If I remember reading the contracts like 2 years ago or whenever this was actually announced, that SoFi's name won't even be visible. So I'm not worried about this. This is not a big deal, in my opinion. Also, the massive viewage from around the world, 90% of the people that are actually watching those things are like, they couldn't even be customers regardless. I'm aggressively buying NVIDIA and JEPQ. You're taking two different strategies, eh? One dividend approach and one ultra AI hyper growth approach as well. I mean, I own both of those as well, so I've got nothing to say. I like both of those, but it's a good 50-50 split if you want a diversified approach, I guess. Is JEPQ quantum? No, it's JP Morgan's equity income fund. So essentially they're betting on the S&P 500 and then they're writing covered calls and cash secured puts on your money that you're giving them. Tanner, thoughts on AMD? Seems more expensive than NVIDIA. And people can say that it's better in inference and everything, but that's mainly on a per chip basis. What AMD really lacks is being able to try to make, an entire stack and like connecting 72 separate GPUs. Nothing really competes with the MVL 72 right now. So, I still think customers do prefer NVIDIA, and that's why they're willing to pay the massive prices. Do I play tabletop games? I like tabletop games. Really big into chess. You call that a tabletop game? I think I would. Am I disgusted by Amit and Steve's talk of yield max stocks? I didn't hear anything about this. What quarter do you expect a parabolic movement for SoFi? I don't expect a one in particular. However, I do think that next quarter is being underappreciated right now. I think it'll be a significant quarter for them. Loan growth is going to be unbelievable, but also like it's not really being priced in very much. Have you played Bughouse Chess? No. Or sorry, I have played once on chess.com, but I do not play it. No. It's too janky. I don't think anyone really plays it. But you can go to the specialty games on chess.com and play all those weird versions of chess. What did you overall think about the whole debate between you and Chris versus Amit and Steve? I thought it was like, I knew no one was going to change their mind. The real people that can make up their minds would be the audience. I honestly didn't think that my comments about Amazon were all that crazy. Everyone thought that I was going mad, but like the fact that they don't show MAUs, I thought was a slam dunk. And whether they're a $2 trillion company or not, I don't know why that was such a big deal. Other companies like Google and Facebook, who are also multi-trillion-dollar businesses, show MAUs. Why can't Amazon? And their profit is directly related to people continuously showing up on their apps. And then the whole product launches things. They said that AWS has conferences. That's nowhere near what Meta does or any of those other businesses, like what Google I/O does for their product announcements. So I actually, people said I got flamed for saying that, but I'm like, what are you guys talking about? This is just showing. You guys asked for a single tech example of a company that doesn't show MAUs and doesn't have product announcements like that. I gave you one. Did Steve make you scared when he got real angry? No, we're 1,000 miles apart. I'm not. Steve and I are really good. Like everyone in that group are really good friends. We talk all the time. The only thing I really would have changed was just the second hour, what we were talking about. Market sentiment around what SoFi was perceived to be was never a part of the equation. It was comments that Steve and Amit have made directly. And some of the comments that they had made was around the product innovation and if SoFi is or is not, keeping up with other fintechs or other banks, stuff like this. And we did actually talk a lot about that once the cameras turned off, because we just continued our conversation because, but anyway, I wish that the second hour was more along the lines of that rather than just what the market perceived SoFi to be. But overall, it was a good chat and it was fun. Tanner, any stock you like outside of tech? Well, I guess that depends on what you call SoFi. No, I'm kidding. The fact that I cannot think off the top of my head means probably not. We need more DDI in future investing. We talk about this all the time. We've talked about starting weekly podcasts. We've talked about him getting on the SoFi Weekly more often, or the FinTech Friday. But he is the busiest man on earth. He has I can't say he has too many children. I mean, he lives a much happier life than me. I think just overall fulfillment in life is like Chris Hager, guys. I don't think people understand. Like the dude's an actual angel. Like he's like the nicest person I've ever met. Along with Roy as well. Roy is like also like these people are heaven sent. But that also means that like you have to find the time between whenever they're literally like doing charity work and hosting fundraisers and doing all these crazy things to help their local communities, to find time to also talk to another community about SoFi. I'm a little bit more more focused on stocks right now, but maybe my charity work is it will be later in life. No, I'm kidding, but well, no, I'm not kidding about that. I'm just I could do more today, but anyway, Shark Ninja, yeah, maybe that's a non-tech company. Let's see here. Yeah, no, it was a fun conversation. Some people thought that we were kind of getting nasty with each other, but really it was just more for the fun of debate. Do we believe Noto will hit his target in 2026 to get his options package? I mean, it depends on what you mean by that. Do we think that he's going to get $25? I mean, yes. Do we think that he can get $35? I mean, it's possible. Do we think that he'd get $45? We're stretching it. So we'll see. Did SoFi get a new $14 analyst rating? It did. They did from a new analyst that's covering the business. That same analyst put out 14 separate ratings all on the exact same day. So do I care about the report? No. Inside the actual report, he talked about their increase in lending and how he believes that it's a bad macro environment right now for them to write loans. He also said the exact opposite for Affirm and said how he loved that they were ramping up and that it's a good time for them to give loans. So I really if I was a teacher grading his report, I'd give it a big F. And honestly, I probably I would just crumple it and throw it away. I really didn't care about it at all. Tanner, do you think that SoFi has the potential to double in 2 years? Of course. Of course. Go from 13 to 26 in 24 more months? Yes. Can I guarantee 100% that that happens? No. Could that happen? 100%. Yes, I feel like SoFi has a lot of bag holders up around $25. I don't think it's as many as you think. If you're bag holding at $25 a share, you've had ample time to bring your average down. Okay. I also had a comment the other day that said, Tanner, you've been pumping this thing since $24 or something like this. Guys, I've never seen SoFi in the $20 ranges ever. The highest I've ever seen the company was $18, and that was a couple months ago. Okay. To me, that was an all-time high. I never saw it whenever it IPO'd or whatever. They were SPAC'd onto the market. I think they were IPOE, right? First time I ever bought the company was at $14 around 50 cents. And then I've been buying all the way in the dip, was able to cut my average essentially in half, which if you're a long-term shareholder, that's exactly what you should have done. You probably actually should have done it more aggressively than me in the $4 ranges. But I was buying other companies as well. So, yeah, there's probably an equal amount of bag holders in the $5, $6, and $7 ranges. Yeah. Okay, let's see. If people are bag holding at 25 and didn't DCA in the last few years, that's your loss. I do think to some degree that is true, right? Like knowing what to invest in is half of the battle. Knowing how to invest is another thing. So if you just took your entire 100% portfolio at a company that just IPO'd and you said all in after it just went from 10 to 25, what are we doing? You know? You got to take some personal blame. You can't be putting that off on anyone that you see, especially on the internet or people on the internet that literally weren't covering this company at that time, just because you made a personal bad investment. It's also fine too. Like that does happen. Actually, in the last FinTech Friday after hours, which I just uploaded today, we talked about what do you do whenever you're holding companies that are down, 80%, 90%? You don't think they're coming back. And it's very different how people, like different strategies that people have. Some people decide, hey, you know what? I'm just going to let it ride, and I'm going to, like, if it's going to go to zero, I'm going to let it go to zero. I'm already down 90%. Some people say, okay, well, I'm going to put a little bit more because if it does recover, even just a little bit, I'm going to make a better return. Personally, I think both of those are bad, especially whenever the companies that you're holding are bad. But if it's something like SoFi and you're down 90%, but each and every chart revenue looks up and to the right. Well, I guess it's that way for you guys, but just up and to the right for revenue, up and to the right for earnings, breaking out of negative, or like they start to be profitable. Everything that you're seeing in the business is slowly getting better. Members go from 2 million up to 11 million. Are you really holding a company that should be down 90%? Like, just think about it for a second. But people get way too involved into stock charts and they go, chart's no good on this one. Yeah. The chart's no good. All right. Fair. You're right. You're right. Astrology can only take you so far, guys. I'm telling you. Doing that would show you that no company can ever bounce off even what Amazon has potentially done, right? Amazon for a long while was selling off like crazy, even though fundamentally they were doing fantastically. Very, very well. Do you think Q2 for SoFi will see 40% growth? I have not done comps, or I have not looked at any like real numbers for Q2 just yet. I also don't know what their comp is for Q2 of 2024, so I've got no clue. But I would assume that's probably a hard goal without looking. Buy high, sell low. It's been known to happen. I've done it. Whenever you in growth investing, especially whenever you're buying companies like myself, where I'm like trying to buy the next big thing, or companies that I just think are going to dominate massive markets way out into the future, you do have to make a couple presumptuous bets, okay? And I've been known to get companies wrong whenever they don't execute. Like you're not everything, especially in stocks, can you control. I'm not the owner of these businesses. I'm not making the direct decisions. So you can lose money on companies. I mean, that's for real. But as long as you have a higher than 50% success rate and you're beating the S&P 500 and your fees aren't taking away from your beats on the S&P, you should probably continue. And if you're consistently not beating the markets, if fees are eating away at your portfolio even further, you need to buy index funds and stop doing this. You know? Two-part question, Tanner. If you're so confident in SoFi at these levels, why not add? Second, what's the next 5 reasons to buy stock? Good parts questions. I've been really thinking about adding to SoFi recently, and the $13 range is going into Q2. So I might add soon. But overall, it's a large position in my portfolio for being what it is. I mean, the largest companies that I sort of have are tackling, in my opinion, much more important problems. Like NVIDIA is a large stake in my portfolio because it's tackling the world's most important problem. But I am looking at potentially adding down at these prices. And if it does go back into like some 12s or something like this, we're continuing to see good news, I could potentially add. I mean, I think if we get really, really good May numbers for website traffic, you could see me add if the stock price stays where it is. Top 5 or 5 reasons to buy stock next. You could probably expect Amazon, you could probably expect, I don't know. MD, I'm not going to get your hopes up, but could be Shift4. I've been looking at Shift4 a lot recently just because Jared Isaacman's coming back. Something along those lines. That could be interesting. Could be Nubank. That'd be another one I'd like to write on. But anytime I say Shift4 around MD, I feel like I'm like hovering a chocolate bar near a kid. I mean, he gets so excited. See, I knew it. Brother, I know you love that company, and I hope I deliver you some more content for Shift4. Yeah. Hood's valuation and prices here. What are your thoughts? I think I need to see some real numbers. So people are getting excited about the S&P 500 inclusion. That's all very exciting. But those aren't reasons for me to add as much as it is like, I want to see crypto volumes come back and I want to see what their trading volume for May is. Once I see that, then I can know if those things are going to be very exciting. Overall, like Robinhood's going to do very well, but like it's not as cheap as it could be. Whenever Hood just recently ran down to $30 or $35 a share, that was like a screamer buy, right? Roy and Amit and I were all buying at those prices. It was, much better to buy than double from there immediately. I would also like to see more Shift4. Yeah, I'd also like for them to put out some more news. But yeah. Who won that debate on SoFi? Rock, I mean, that's for you to decide. I was part of it, so I can't really give you an answer. If you were to ask me, I'd say me and Chris and I. The dip in Hood in April was amazing. Yes, it was. Okay. Would you buy HIMS at these prices? I don't even know what HIMS prices are. I could check. But no, I still would not buy it for the same reason I haven't been buying it, because I don't know the industry. And I don't really want to learn a new industry. And that doesn't mean that there's not massive markets that I'm not a part of. Or sorry, that I am a part of, sorry. Tanner, if MAUs really does not matter as much for SoFi as you guys say, why does the company not just put it out? Well, I think you're kind of answering my question a little bit. If it does not matter as much as I say, why do they not put it out? Because it doesn't matter. But they potentially could. Like Chris said, more data is better for every individual. Like I think that they should. I just don't like, if they choose not to, then I'm also fine with that. I want to see the amount of insurance clients that they have, or different products. Like, why don't you break down SoFi Invest into different particular customers? Well, I also think that it's just like, how big do you want their investor deck to be? I mean, I would say 150 slides, but they would probably say, hey, I mean, we've got other work to do. Let's make it 40 slides. Let's make it 30 slides. So I would want as much detail as they could give us, of course. But legitimately, I don't see the reason to not just look at revenue and profit and all of those indicators and say, okay, these are the metrics that we find important. I also think that Robinhood can confuse users, because whenever they went from being like more of an active trading to less active trading in terms of focusing on retirement accounts, that MAUs continued to fall while average revenue per user skyrocketed. Okay. And a lot of people I saw online actually say, oh, but MAUs are falling. But that's actually no longer the metric that you should look at Robinhood through. It actually points people in the wrong direction. Okay. I think that there's probably a large percentage of users on SoFi, and these are the people that make the most for SoFi, that are personal loan or home loan customers that have come to SoFi particularly for a loan, and they have it on autopay, okay? And they don't actually use the app. They're standalone loan customers. They don't use the app, but they make the most money for SoFi. So MAUs, whether it's doing well or not, what I think people would look at is not whether MAUs are growing, but what is MAUs as a percentage of total user base. But it might actually be misleading because they're not all particular monthly active users. Some people could be loan users. Some investors would say, yeah, but they should still be active. But I don't necessarily think that. Like, if someone wants to come and utilize SoFi, like they're happy with their existing branch or whatever, but they want SoFi because they were the best priced personal loan, I still want that customer. I don't think that customer should be turned away because, like, hey, if you're not going to actively use our app, we don't want you on our app. Like, I'm sorry, F that. I'd rather make a ton of money through lending, which is a place where they can make a fortune. What attracted you to the fintech sector? Ease of understanding. So, even what I find in semis as well is that, like, it gets extremely complex, and learning which winner is going to come out ahead based on new architecture, new protocols, new ways that they actually design the chips. It can get very complex, even over my head. Okay. I have to rely on experts that break it down to great degree for, amateurs like myself. Fintech is so easy to understand. Okay. You have products per member, revenue per member, deposits per member. Like these are things that, like, everyone should be able to understand, or more analytical people, which I would classify myself as, is like, I can see numbers pretty easily. I'm not saying that that's special. I'm sure a lot of people who are in stocks can do that, but fintech's just very easy to understand. The total addressable market's expanding like crazy. I understand the need for it. I understand the cost savings. It's very easy. So you should be able to, or you should hold some degree of positions that are easy to understand, while also having growing total addressable markets, growing market shares, products that I understand and find differentiated. Thoughts on Uber? I think they're going to do great. I think that the autonomous vehicle market will be a commodity. Whether you use cameras or you use LiDAR, sitting in a cloth or leather seat is going to be more important from a consumer perspective. As long as you can get from point A to point B as safe as possible, with large amounts of privacy, good pickup location, stuff like this, like fast response times, that's what's going to be most important. And I think that the companies that can guarantee high utilization rates, great data on where to pick up the user, already have an insane network effect, warehouse to help with charging and all of these things, is Uber. Their existing infrastructure is insane. Okay. And I also think that there's going to be some mentality of, if you're not Tesla, you need to compete against Tesla, you need to team up. So, like, one of the things that I also am very bullish on with NVIDIA is, like, okay, if you're not Tesla, The humanoid robots that could potentially do well are all of the ones that are utilizing NVIDIA, because that shared data pool will actually potentially allow them to learn much faster. Okay. Because then NVIDIA learns from the simulation from running all of those companies, different humanoid robotics, and then that goes back into their models, and then that gets sent back out to customers, and they just have a much faster way of growing across 30 different companies than one company trying to tackle that business, even if they are the best engineers in the world. Uber, I think, is that to some degree of like autonomous vehicles will do really well because they're going to tap into 200 million active customers like that. And Uber's CEO has already talked about saying, hey, if you come onto our platform, we can guarantee you utilization. So, yeah. And you're already seeing Waymo, like them going into Austin versus into San Francisco, that they have a faster, like willing to use those autonomous vehicles than on the Waymo One exclusive app or any of the other apps that they've been practiced on. So Uber greater than Palantir at this valuation? I didn't say this, but I mean, like, I would not pick Palantir in a lineup of very many companies at this valuation. Not to say that they couldn't be a big company. It's just hard to buy extremely expensive companies. It almost, like, it so rarely ever works out. When does buying the most expensive valuation in the S&P 500 ever work out? I think Zoom was that at one point in its career. Let's go through and try to name the companies that were like extremely high PEs or price to sales in their history that have actually been able to bring down those valuations and make that investment worthwhile. I don't know if it ever works out. Sure, you might not lose money on Palantir. Maybe it sits at that valuation. Peloton's another one. Yep. Cisco was another one. Yes. But those companies can run up very much, and you might not even lose capital. Like the valuation can lower and lower and lower as they continue to put up better and better numbers and match that valuation. But over the 2 years or however long that you have to hold it and the stock price stays flat, you're losing to the broader market. So, but how long did it take to go? It doesn't have to go down. It just can't, like, when does it, like, what? So that, where do the models on their growth go to? Do we get to 80% year over year revenue, 100% year over year revenue, expanding margins? Like, if that's true, then yeah, maybe it's still cheap. But I haven't seen a single analyst price it that way. It's been like 45% growths. Here, let's go to, let's see here. I'm going to bring up two things. I'm not anti Palantir. Like, that's one company I would never bet against. But I also think that there's, like, sometimes in the markets, there's like screaming buys. Okay. And I don't know, like, even the biggest Palantir bulls are not saying this is a screaming buy. Some of them are saying, hey, this is a screaming hold. Who gets that? Who gets excited on that? So in the month of May, there were a lot of different price predictions for Palantir, and we're going to look at the fundamental side here in a second. But and no, I don't always trust Wall Street's judgments. Okay, but to take into account, all of these people all have teams. Okay, they're all looking at this company. To some degree, they understand the business model. Okay, so I like reviewing this as a quick glance. But no, I would not decide my buys or sells based on what someone else has to say. But essentially, almost all of these are some degree of a sell, and then the most bullish two people here, which are on the earnings calls and everything, place it at between a 13% upside and a 6% upside for the next 12 months. That doesn't excite me. But I also think that this is potentially false as well. Like, I don't also think that there's a 70% downside. Now, let's go ahead and look at the actual earnings assumptions of Palantir. And I'll actually see earnings revisions as well. So for Palantir, this is what all of those people who are betting against this company, and we'll look at the 3 years because this is where you see the bulk of the analysts. All these are based on one person's assumptions of Palantir, so I don't care to look at that. But you're seeing a 41% growth rate for 2025, 25% growth rate, and then 32% growth rate for 2027. Extremely fast growing company. Okay. But by 2027, you're looking at 136 forward PE. Mind blowing. For revenue, 35%, 28%, 31%. All right. That seems in line with what SoFi is going to do. Doesn't mean that Palantir is going to do that. Maybe they get up to 70%. But even then, you're still looking at like price to sales. Oh, and by the way, price to sales for 2027, 47 times. Guys, if the growth rate doubles, I wouldn't buy it. Like, I don't want to buy a 20 times price to sales on a company. Like, no company in the world has been able to sustain some sort of 60% growth rate, which, by the way, they haven't done. But even then, that doesn't happen for long periods of time. Salesforce versus Palantir. Well, I hold Salesforce and I don't hold Palantir, so I'm a little biased. But yeah. And like, I don't want to talk anyone away from Palantir because a lot of people also buy it for moral reasons. Like, they want to be at the next frontier. They're willing to pay whatever price for to support American defense or American supremacy and artificial intelligence and, you know, technology in general. Fine. I don't care. Like, go ahead. Are you buying Nubank under 12? I think so. I haven't purchased anything yet, but I will be buying Nubank again. It's time to do covered calls for Palantir. I don't think that that's a bad strategy, but you never know with these like mind-blowing businesses like that. But yeah. Evan, I hope that my 2 seconds of opinions that are extremely uneducated on Palantir doesn't make you change your portfolio. Really go out and do your own due diligence, please. And I wouldn't think that that's by going to some extreme bullish Palantir, investor, but I don't exactly know how you would model for Palantir's growth, but I would try to do something along those lines, read different reports, get a bunch of different opinions to try to help with your due diligence. But yeah. How about CoreWeave? CoreWeave's valuation looks a lot better than Palantir's. You know, you're talking about a company that didn't grow 39%, but instead grew 420% year over year. They're not going to keep up that level of growth rate, but I can guarantee you one thing: they're going to grow faster than Palantir. Doesn't make them a cheap company either. I'm not saying that. And I actually think that Palantir's moat is potentially stronger than CoreWeave's. They're extremely new, not proven, but they're in a good market at least for the next 24 months. But like some people look at large growth rates and they think like, I think that it's hard for people to understand after like 30% growth rates, what that does to a company over multiple quarters. And the difference between 30% compounded over 5 years versus 40% versus 45 or versus 60% compounded over 5 years, it makes the largest degree of difference. Insane change over longer periods of time. And so people see that Palantir's growth is accelerating, which in my mind allows me to just think, okay, well, when does that end? Because that can just keep going, you know? There's no end to their potential scale there. But if and when it does, will determine how much people are really off by. Like, I don't know when that happens. I'm not a Palantir Super Bowl. Roy in chat says they can hold up 40+% growth rates for multiple years. But I feel like the market's pricing it like they're doing 60 for the next couple of years. That's a huge, huge difference. Okay, ladies and gentlemen, I've done an hour and 16 minutes. I'm hungry. I haven't even had dinner yet. So I'm going to go. Thank you guys so much for coming and just hearing my thoughts. It's unbelievable. Yeah, it's what a crazy thing that I'm doing now. Please let me know as you guys learn about different stories online, what you guys would like me to cover. I want to continue to talk about the things that obviously are of interest for the entire community. If you guys haven't already, joined the Discord. Like as a growing group, it's super exciting to learn from each other, and I learn from you guys all the time. Like you guys have great ideas, great ways of looking at companies. I'm in the Discord all the time. So join below. This is one of the greatest communities we could have ever started. We're all trying to, do the same thing here, which is just get rich and avoid the same mistakes multiple times over again. I mean, that's the goal. And we're not trying to do it in any sort of a get rich quick schemey way or anything like this. It's just honest investing. So thank you guys. Appreciate the time. Bye for now.